Good morning, everybody. It is Friday. It is the morning blast. It looks like we made it. You join myself and Michael, as always, for a very candid breakdown of what's been going on in markets, what to look out for, a few rants, etc., etc. Michael, how are you? Oh, hang on, before I go any further, I forgot the disclaimers. I'm a little bit hungover this morning. Nothing said on the podcast is trading or investment advice. There are explicit warnings on the podcast. We do no editing. Take us as you find us, especially on a day like today. Michael, how are you, my dear, dear friend?
Well, a very good morning, Shirai. Good morning, everyone. I was going to say that you sounded better than I expected, but you sort of deteriorated
I did.
as you went through that introduction. You should have quit while you were ahead.
Do you know what? I did feel myself tailing off. I'm like, oh, God. I was like, that opening 5 seconds really, really, really took it out of me.
It's taken it out of you, hasn't it? But in any case, a very good morning to you, Ryan. Good to see you last night. A very good morning to all our listeners. A very happy Friday as well, of course.
Yes. Indeed, indeed. Should we crack on?
Yeah, can you read Clive's
I'm
rap,
closing
or
one
do I
eye.
have
Yeah,
to do
no,
it?
let me just move the 2 a.m. KFC out of the way and
Oh,
close one. This is not Five Guys on my chest.
again.
Hey, right. Market update and levels to watch out for from our dear friend Clive Lambert over at Futures Techs. As he says, lots going on in the last 24 hours. Markets are not dull at the moment, that's for sure. S&P filled the gap at 69.60. Everyone loves a 69.60 and 50 cents yesterday, but upside was limited after that. Again, we were calling the gap fill, so that was nice. DAX saw red, but held 24,823 to 24,847 area, cited as support yesterday. Eurostoxx futures, Eurostoxx 50 futures, they've still got to fill the gap from Monday, which is up at 60.19. Gaps are magnetic, so let's see if that happens today. FTSE futures, they saw red as well and posted a dark cloud cover candlestick reversal. Not a fucking clue what that is, but apparently that's something.
Well, I do, Ryan.
Well, often it's a powerful reversal seen, as seen on the FTSE.
Indeed. And that's exactly what Clive has said in his book, where he references an event in May 2006, where
Pages.
he warned that a storm may be brewing. And I quote, never missing the opportunity to throw in a dodgy pun. And he hasn't changed in the 2 decades since.
If anyone's wondering, it's page 78 to 81 of his book.
And mine is an unsigned copy because
mine's signed, but he swore when he signed it. I won't say what he called me when he signed it, but put it this way, I can't put it this way, I can't put it on eBay anymore. Where are we?
Let's move on from that.
Fund futures, they rallied to 128.03 where the sellers returned. Gilts, they rallied to fill the gap at 92.10 where again the sellers returned. Dollar yen, obviously there's more to talk about that in a second, but that saw some volatility overnight, so something must be happening there. Yeah, so he's put there must be something happening there. He wrote that before the intervention, so we'll come up with that on a second. Intervention for ants, let's be fair. Dollar weakness, that was the main story yesterday, with euro dollar rallying once more to put some distance on key supports with a 115 handle. Gold, yellow metal, printed 49.70 overnight, gunning for 5,000 to give the headline maker something to shout about. Clive has upside targets at 50.62 and 52.60. Silver, also eyeing big round number at 100. We've been talking about this for a long time now. Big numbers and round numbers are magnetic, so keep an eye on that. Currently printing, when Clive wrote this, 99.39.5. Platinum also joined in with a new all-time high overnight at 26.86.5. WTI and Brent, that gave back Wednesday's gains, but still a bit messy and lacking clarity chart-wise. Henry Hub rejected the upside with a big shooting star reversal. They're watching 464.5. Again, I love Clive and I love his technical analysis, but do not start using technical analysis in this market in the front prompt. Henry Hub. Similar price action was seen in TTF, but Fibonacci support of 36.00 holding this morning so far. EU carbon markets gapped up yesterday morning, then pulled back, but didn't quite fill the gap. This is now, quote, a gap sandwich. Oh, God.
Jesus.
87.48 is the gap support. 91.76 is the gap resistance. Corn and wheat, obviously US corn and wheat posted damp sessions yesterday, but soybeans failed at that 1,071 level. The high was 1,072 and 4. Still no buy signal. Thank you very much, Clive. Yeah, thank you, mate. Michael, what happened?
Well, firstly, a very big well done to you for getting through that.
Do you know what? I am
Done well there.
I am very, very proud of myself. I'm not going to lie.
You mentioned again, we're going to talk about that in a second because it's another one of those moments that we quite like on this program where market participants who should know better really kind of show themselves up when these sort of things happen. But we'll get to that momentarily. As for yesterday, I guess the broad vibe was kind of more of the same. Market participants continuing to dial back up their risk exposure, going back into those long equity positions that some people have bailed on earlier in the week when Trump started his escalate to de-escalate strategy, and market participants continuing to digest the details of this supposed agreement regarding Greenland, although it must be said that details on that front are still very, very elusive, frankly. I don't think anything at all has been published to the best of my knowledge. Having said that, we did have a few bits and bobs in terms of economic data. The weekly jobless claims numbers out of the States were pretty much bang in line with where they were a week prior. 200,000 on the initial claims print in one spot, 849 million on the continuing claims print. Do note, of course, that initial claims number does pertain to the January non-farm payrolls survey week. We also had a modest upward revision to third quarter US GDP, which pointed to the economy having grown by 4.4% on an annualized quarter-on-quarter basis in the 3 months to September, although that's really too stale to matter at this point. And we've also this morning had the December retail sales report out of the UK, which pointed to headline sales having risen by 0.4% on the month, better than market expectations for sales to have remained flat, although very much in line with the retail earnings that we've had, which have been pretty solid of late in the UK. I did just want to quote from the ONS press release, because in the first paragraph of this press release, there is quite a good sentiment check, and it reads, online jewelers reported that demand for precious metals picked up in December. In case you were wondering who was underpinning gold at this moment in time, it is retail buyers who are coming and stepping in there. We've also had a few policy decisions. The Norges Bank held rates steady at 4% yesterday, bang in line with expectations, while reiterating their prior guidance that rates will be cut further in the course of this year. And then this morning, the Bank of Japan also standing pat, holding the policy rate steady at 0.75%. That was a marginally more hawkish than expected vote, with Takata dissenting in favour of a 25 basis point hike. Ueda at the post-meeting press conference wasn't particularly explicit in terms of the timing of further rate increases, although he did say that they will continue to raise rates if their economic outlook is realised, which is very much in line with the guidance that he has been issuing in recent meetings. Other than that, not especially much going on, to be completely honest with you. We did have a little bit of excitement in the gilt market yesterday, just showing you how fragile sentiment is in terms of the fiscal affairs of the United Kingdom. There were reports and rumours doing the rounds that a chap called Andrew Gwynn might be about to stand down as an MP. Why on earth does that matter? He's only a Labour backbencher. Well, the thought process is that because Andrew Gwynn not only represents a seat in Manchester, but is also very good friends with a man called Andy Burnham, the thought process goes that Andy Burnham could stand in the by-election that will now be triggered. In turn, that would open a potential return to Westminster for Andy Burnham. And of course, becoming an MP is a prerequisite before you can become the leader of the Labour Party. And of course, Burnham's ambitions on that front are no secret whatsoever. And also, Keir Starmer, the Prime Minister and current Labour leader, his position isn't exactly secure. Why does all this matter? And why did this rumour cause 10-year...
Tell us, Michael. Why does it matter?
Well, firstly, the reaction was significant. On this rumour, we saw the 10 and the 30-year gilt yields rise at about 10 basis points apiece, to which everyone was going, what the hell's going on? The reason why it matters is because, of course, Burnham is not only quite considerably to the left of both Keir Starmer and Rachel Reeves, he's also the man who not once but twice has said in media interviews that the UK, quote, shouldn't be in hock to the bond market. To say this chap has no fiscal discipline whatsoever is probably an understatement. And of of course, market participants kind of gaming out a scenario now where Burnham is not only in a much stronger position to take on Starmer for that Labour leadership, but potentially even gets control of the levers of power, which would, well, frankly, see the current fiscal rules torn up. And it is indeed scary. I think the trade on that front would be to be like long EasyJet or something, because the flights going out of here are going to be very, very full indeed.
It must be said that Burnham did come out with that, I have no idea what everyone's on about. I'm sticking to you. My focus is on Manchester.
Yes. I was just going to come on to that, and you're absolutely right. Burnham has kind of done this whole "I'm focused on doing my job, I don't know what's going on" thing. Clearly you do know what's going on.
Well, I was going to say he's half right.
Yeah, yeah, that's very true. There are a couple of other issues here, which is actually why we've seen gilts probably pair half of this move. Again, I think it more speaks to just how jittery the market is about the UK's public finances than anything in particular. The first issue is, does he actually stand in the election? Does he want to? Does he want to stay as mayor of Manchester? And do the Labour Party even let him? Because obviously they have to approve the candidate that's going to stand. And the second bit is, if he does stand, does he even win? Because if you look at the polling in that constituency, it's likely to be a very, very tight three-way race between the Labour candidate, Reform, led by Nigel Farage, of course, and potentially the Green Party as well. Yeah. So it's by no means a certainty that if Burnham does stand, he is going to win this seat. But it is, of course, something that we will keep a very, very close eye on. I can't say that by-elections are a particularly interesting event, usually. However, this one could be a little bit different given the potential broader implications of who wins that. And just lastly, a couple of comments from President Trump. Of course, he is now back in the United States. That noise you hear is a sigh of relief being breathed by every leader in Europe. He was talking about Iran. This is on Air Force One, going back to the States. He was talking about Iran, saying that Iran wants to talk and that the US will talk. Of course, we mentioned the next potential geopolitical flashpoints in the podcast yesterday, so do go back and have a listen to that if you haven't already. And he was also talking about the Fed, saying that he is done with interviews for Fed chair and that he has someone in mind. Again, we don't know who that someone is, but hopefully we get a nomination sooner rather than later. And also Trump is litigating again. This time he is suing JP Morgan and Jamie Dimon personally for allegedly debanking him in the aftermath of the events on the 6th of January 2021, when there was that storming of the Capitol in the United States. And Trump wants $5 billion with a B dollars in damages from that case. I don't think he's going to get it, but it's something worth keeping an eye on, particularly because headwinds for the banking names are mounting. Not only have you got that, but you've also got the credit card cap and various other bits and bobs going on.
Indeed, Mr. Brown, indeed. You done?
I am.
For now. Okay, awesome. So what we're going to have a little bit of a chat and ask you some questions today about yen intervention. Obviously, for those that are keeping score, someone stepped into the market just now by the looks of it, and it's not called it drastic intervention. It's more of a shot across the bow. Would you agree about that?
I would, yeah. Actually, I would slightly pick up on someone stepping into the market. I think my feeling on this, just for context, obviously, as you said, we saw quite a significant move, well, very significant move actually, in dollar yen. We were trading at the day highs about 20 to 8 London time this morning, which was 159.23, and very much in the blink of an eye, the yen rallied two big figures down to a low of about 157.37. So a pretty significant move. However, if you go back and compare that to when the Ministry of Finance confirmed interventions from the Ministry of Finance 2022 and 2024, those moves were to the tune of somewhere between 4 and 5%. This is, while significant, much, much less than that.
Well, this is what I mean. So, bearing in mind,
I think.
Sorry, go on.
I was going to say, I think your framing of a shot across the bows is the right one. I think this has all the hallmarks of what we would call a rate check from the Ministry of Finance, as opposed to anyone actually physically or monetarily having stepped into the market just yet.
Also, the Parliament was dissolved earlier on as well, overnight, right?
It was, yeah. So there's a lot of moving parts in Japan at the moment. Obviously, as you say, Parliament was dissolved overnight, as expected. How
I picked that up, I have no idea.
No, nor do I, because obviously they're going to be having elections on the 8th of February, which is not far away at all.
And obviously I was very drunk.
Clearly. The other thing, of course, is today was the BOJ. The Bank of Japan were pretty neutral, as we were just saying. You either not exactly explicit in terms of the next rate hike and when that may be. So that has, that caused a little bit of yen weakness, and we were actually trading at the highs, as I said, before this move lower. But I think it's one of those where a lot of people are kind of putting two and two together and getting about 15.
Yeah.
Because we know the Ministry of Finance are watching the yen. We know that. There have been public remarks that they're concerned about disorderly moves, that they are, wanting the yen to move in line with its fundamentals, et cetera, et cetera, et cetera. So we know that they're watching things.
Well, just
However,
on that. Sorry, just on that. This is why I'm really against people calling it intervention and whatnot. Like I said, it screams rate check rather than intervention to me. And for one, it's the speed factor. And when I say speed factor, I mean like volatility. So in 2022, when they admitted to intervention, we'd had a 12% move and an 8% move leading up to the intervention. In 2024, April, May, we had a 10% move in the weeks before the intervention. Now we barely, 3% move over a couple of weeks or whatever. It's not exactly dramatic. To me, it's just like, Parliament's dissolved. There's an election coming up. They just want to just make sure, like, just test the process, make sure the lines are open, kind of thing.
Yeah, and it's important that, not every big move that you see in a currency, certainly in the yen, is intervention. There are other things that take place that move markets. I mean, I don't think it was this, but there's every chance that someone's just massively fat-fingered a trade.
Absolutely.
You can't rule that sort of thing out. But I think it's important just to put a bit of context around what a rate check actually is for people who've never kind of, been through this sort of thing before. It's literally what it sounds. Someone at the Ministry of Finance, presumably their intern, has to go and ring round various spot FX trading desks in Tokyo and essentially go, can you give me a two-way price in dollar yen? That sounds like quite a normal request, and it is, but actually it's the implicit message that comes along with that, which is, one, we are watching things more closely than you thought we are, or we were, I should say.
Yeah.
And secondly, the only reason we ask for a price is because at some point we might want to get filled on that price. So, be on guard that we might actually want to execute at some stage.
So this is it. And what kind of Michael is alluding to, but he probably can't say it, but I can, is the fact that when a desk gets this call, people on that desk will tell other people within their trading desk, oh, by the way, MOF are phoning round, and they'll go, fuck, that means they're about to do some intervention. Let's get in front of it. So there's every chance this move was just kind of a snowballing, trying to front run, potentially, the MOF doing something. That to me makes more sense than, capital letters. I'm looking at Zach because he got, I think, a bit excited with his uppercase intervention tweet. But going back to this, wind it back a little bit, even if it is an intervention on the cards and whatnot, let's be very clear what intervention means. It doesn't change the fundamentals. All it does really is buy a little bit of time. And we've seen this countless times. It doesn't change things in the longer to medium to longer term. It gets, headlines going. Yes, it buys them a little bit, but also for the Bank of Japan and the Ministry of Finance, it's diminishing returns, right? Because, you look at how much they're spending to do this and to try and, put some dampeners on the moves and whatnot. It costs more money every time to do this. I think in 2024, they spent $62 billion in 1 month, and they bought about 8 to 6 weeks of relief in the yen. And by July, it was back to where it was at the intervention level, and they let it go through.
Yeah, I think that's absolutely right. It's even when any monetary intervention does take place, because I think it's safe to say that the risk of that happening has been ratcheted a little bit higher based on what we've seen this morning. Even if the Ministry of Finance weren't behind this, you've also now got the volatility argument for stepping into the market as well. So I think the risk is higher than it otherwise would have been, if you'd asked me that question 2 hours ago. However, the way to look at it is exactly as you said, it's almost a speed bump in the broader trend as opposed to changing that trend entirely. You're kind of stepping in, resetting to a stronger level. If you assume let's say 5% move in dollar yen on the back of intervention, spot would trade at 152, 153, and then you take it from there. And frankly, if the underlying fundamentals don't change, well, where do you think the market's going to go? Just because the Ministry of Finance have intervened once, it doesn't mean everyone's suddenly going to be buying the yen in size.
No, exactly that, mate. Exactly that.
So yeah, I think it's very important to obviously keep the yen on the radar now, certainly today and also in coming sessions. The best way to sort of think about it, if this is a rate check, that's like the final warning that they give market participants before they do anything.
Yeah,
so certainly worth keeping on the radar. And if you are going to be trading the yen, firstly, why? Secondly, be very, very careful with any exposures that you're running because, as we saw this morning, you've got a two big figure move on seemingly nothing. If there is an actual intervention, then, easily you're doubling the size of that move.
No, exactly that. Think of what's happened as just blowing the dust off the phones, just making sure that when they need to pick them up and they do need to intervene, it all goes according to plan. That's pretty much what's happened, in my opinion, anyway.
Yeah, I would agree. And again, classic big market move, big narrative. There's a bull market in bad takes doing the round as usual. Use it as a day to kind of sniff people out. And those people who are spouting complete and utter nonsense, just hit the mute button.
Well, don't hit the mute button until we finish talking.
Well, no, I'd like to think we're speaking some sense.
Well, it makes a change. Michael, speaking of about what's coming up today, what is coming up today?
Yes, indeed. A few bits and bobs on the docket today at 9 o'clock this morning. So in 8 minutes' time at the top of the hour, we have the latest flash PMI figures from the Eurozone. All of these are expected pretty much just marginal upticks from where we saw them in the month of December. The composite PMI, that's seen at 51.9, up from a prior 51.5. And then at 9:30, of course, we have the latest UK flash PMI figures. All of these, again, expected marginally firmer compared to where they were in December. Again, the composite output metric seen at 51.5 compared to the prior 51.4. Besides that, we do have a couple of releases from across the pond today. We get retail sales from Canada at 1:30 this afternoon. Sales seen having risen by 1.2% on the month in November. So the data is a little bit stale compared to the 0.2% decline that we saw in October. And also we get the final read on consumer sentiment from the University of Michigan. Their index is expected unrevised at 54, according to the January metric. Other than that, there's not really anything on the earnings docket today, although we do have a few bits and bobs. Next week is a very, very busy week of earnings. Actually, mega cap names like Meta, Microsoft, Apple, etc., all due to report next week. And as for central bank speakers, just a couple today, due to hear from the ECB President Christine Lagarde. She is still in Davos. And we also are due to hear from the external MPC member, Megan Green, who will be speaking this morning. And of course, she is one of the more hawkish policymakers at the Bank of England. And last, but by no means least, as always, really, bear in mind the potential for gapping risk over the weekend. There are still a lot of moving parts geopolitically. And now we've got the potential for the Bank of Japan and the Ministry of Finance to be messing around in the mix as well. So do be very, very careful if you're running any exposures over the weekend.
Well, yeah, just on that. So, funny enough, me and you were talking about this last night. I think, if not, I dreamt it.
I think we'd had about half a pint of Guinness at this point. So yeah, I remember it.
I'd smelt a few wine gums or something like that. But we were saying that, it's one of those weekends where unless you need risk over the weekend, just don't have any risk on over the weekend. We spoke yesterday about potentially where does Trump pivot next. That now more than ever, with what's going on in the bank, over in Japan, what's happening with the US with this massive winter storm, with Trump's headline risk, Greenland's now kind of all doled down. He's going to want something to talk about over the weekend. Yeah, just try and keep.
There's very little. I'm not going to give trading advice because you're not allowed, and also you wouldn't want it.
Buy stocks.
Well, yeah, do that. But if you think about it, there's not really a lot to lose or to be lost by sitting there at the end of the day on a Friday about 1 o'clock in the afternoon, close everything out, go to the pub, come back Monday morning. If nothing's changed, put it all back on again. Yeah, you're going to pay a bit of spread, but at the end of the day, would you rather pay a little bit of spread and commission for the peace of mind of being able to sleep for 3 nights over the weekend? Or would you rather not do that and spend the entire time checking headlines and worrying about, where crude's going to gap at the open and all that nonsense?
Well, we actually spoke about crude exactly that last night. Again, I'm nodding away and saying, yeah, I completely agree. But then I'm also looking at my open positions going, well, I'm not getting out of these. But we said
he's not taking his own advice.
Yeah, we were saying last night about how there is no way on God's earth that I would ever want to be short oil over weekends, like at the best of times. But yeah, it does feel like if gun to my head, just because we don't know what's going to happen, there's nothing that I could see. We said exactly this last night. There's nothing that I could see happening over the weekend which sends oil down $5. But there's at the moment there's a few things that might send it up $5 over the weekend. But
Yeah,
again,
exactly that.
this is a punt, and again, you're paying for the privilege of playing, basically. But yeah,
Yeah.
as Michael said, if you can take risk off the table over the weekend, do so.
Indeed. But that's all from me. Lastly, a very good morning to Dario Perkins, who's tuned in today. Apparently, our segment on Japan was really interesting, which is high praise indeed from man with the gold BMW. But otherwise, that's all from me.
Well, Dario, you've made my day. You made my whole week.
We'll have to buy him a jigsaw puzzle.
See what I did there?
Say thank you.
Whole week. Okay, anyway. Right. Everyone, have a lovely weekend. We hope we've offered you some value this week and put a few smiles on your faces. The feedback on our new kind of way of doing things has really been good, so thank you for that. If you do want to stay up to date with the headlines that matter to markets, do follow Zach on Twitter and do subscribe to either his Substack or our Substack. Either, I don't really care. I really need to, I think, probably go and throw up a little bit because I'm very hungover. I'm going to go and then have a Bloody Mary. Guys,
some of us have got to do some work, so I'll hold down the fort.
I'm going to have a haircut as well. I need to get my ears lowered.
You fucking need it.
I do.
You really need it.
I look like the fifth Beatle at the moment. It's getting beyond. Right, anyway, enough about us.
We're waffling now, aren't we?
Guys, have a lovely weekend. We love you a lot. See you Monday. Bye.